The US stock market is not exclusive to Wall Street. Hello everyone, welcome back to my channel. I am Aji, your explorer of the US stock market. AI investment is undoubtedly the hottest topic in the capital market in the past 2 years. But it must be said that there are very few investment opportunities in the market that truly benefit from AI. Only a few sporadic companies like Nvidia have truly experienced a surge in stock prices. But this situation is likely to change soon. In the just concluded earnings season, we saw a new trend in AI, where traditional AI benefiting companies' stock prices seemed to stagnate, while a new AI track emerged one after another, as if a budding opportunity for AI explosion was emerging. Due to work reasons, Aji has to read a large number of company financial reports and investment banking research reports every day. This AI trend can be said to be the most eye-catching change in the industry after this earnings season. But I found that many retail investors have not noticed this. So in today's video, Aji will reveal to you a budding AI investment opportunity. To understand the latest AI investment opportunities, we need to quickly understand the development of AI in the US stock market industry. At the beginning of 2023, with the rise of AI big models and the explosive growth of computing power demand, AI infrastructure companies like Nvidia were the first to enter investors' vision. In 2 years, the company's stock price has increased nearly tenfold. I'm sure everyone has heard of this. However, the development of AI in the future is probably not clear to many new investors. After the outbreak of basic layer companies, AI caught investors off guard. On the surface, almost all software companies on the market are claiming to use AI, and investors are also flocking to it. However, after several earnings seasons, people realize that the so-called AI's effectiveness in actual enterprise operations is mediocre, just a gimmick. So, almost all software companies' stock prices were hit back to their original form after soaring. Subsequently, in the second half of the year 24, the situation underwent another reversal. Shopify, Salesforce, ServiceNow, and other software companies have suddenly experienced an explosion, and the reason is that AI has brought unexpected changes. What changes? Reduce costs and increase efficiency. It's hard to say that these software companies are AI enterprises and they don't have any decent AI functions. However, by applying AI internally, they have successfully cut a lot of costs, optimized the company's operational efficiency, and ultimately brought tangible improvements in performance. Furthermore, AI cost reduction and efficiency improvement have spread like wildfire to the entire US stock market industry. And even now, it remains the most certain trend in the current AI application field. The reason is also very simple, because there is still a lot of profit space that has not been released for AI to reduce costs and increase efficiency. According to Goldman Sachs' forecast, by 2030, Fortune 500 companies are expected to save up to $935 billion in costs through AI automation. If you are investing in a stock AI now, you must also be aware of this trend. However, although AI has good growth potential for cost reduction and efficiency improvement, it still has a ceiling. Although costs can be reduced, they cannot continue to decrease. In addition, as enterprises invest more and more, the marginal effect of AI in cost reduction and efficiency improvement will also decrease. So if AI can only bring cost reduction and efficiency improvement, then the so-called stock price growth brought by the application of AI is destined to be unsustainable. If the company cannot find new growth points, the stock price will eventually undergo adjustment. A typical example is Salesforce, mentioned earlier. As one of the earliest companies to apply AI to reduce costs and increase efficiency, the company's stock price has performed exceptionally well in the past 24 years. However, as the cost reduction effect gradually released, further agent business did not see any improvement. So this year the company's stock price began to turn downwards. Of course, there must be other reasons working together here. But the disappointment of expectations for AI is undoubtedly the most important one, since AI cost reduction and efficiency improvement are unsustainable. Is this wave of AI investment destined to be a flash in the pan? Of course not. In fact, I don't think the real investment opportunity for AI has officially arrived yet. Once it does, it will be a turning point that can change the fate of our investors. AI is a disruptive productivity revolution, and its true value lies not in cost reduction, but in creating new income. The chart summarized by Goldman Sachs below illustrates this point very well. The dark blue color represents the scale of AI cost reduction, while the light blue color represents the scale of AI revenue growth. It can be seen that the true value of AI in the future, or the value of continuous growth, lies in bringing revenue growth to enterprises. At this stage, enterprises are no longer optimizing existing processes, but applying AI to explore new businesses and markets. This is the true opportunity with long-term investment value and the ability to change the fate of investors. And this is the key point that Might wants to share with you today. Because this financial reporting season, we have seen for the first time the emergence of AI in enterprise revenue growth. AI data analysis company Palantir has given a super high growth rate of 48% this quarter, far exceeding the management's annual growth target of 29%. It is precisely because AI has lowered the threshold for user usage and improved the effectiveness of data analysis that it has expanded its revenue scale. Duolingo, a foreign language training company, saw a 41% increase in profits and a 40% surge in daily active users this quarter. Due to the improved user experience brought by AI, which has attracted more users, Shopify, a pioneer in using AI to reduce costs internally, is now using AI to provide revenue for merchants and enhance the shopping experience for customers, resulting in higher revenue growth. All of these are telling us that the era of revenue growth brought by AI seems to be coming. On the other hand, doubts about AI applications have never been as high as they are today, especially after the release of OpenAI's GPT-5. Many people firmly believe that AI models can do everything. Any application field has the possibility of being replaced. And if you blindly suppress the hammer application now, you are destined to become penniless. And so we have seen a large number of software companies that have risen sharply, but their stock prices have started to plummet in recent weeks. So for us investors, how should we seize the opportunity in the AI application layer? In my opinion, both optimists and pessimists make sense. It's just that their performance in investment is different. On the one hand, AI applications are destined to bring disruptive investment opportunities, and those who hold on to them are also destined to change their destiny. On the other hand, in the early stages of AI development, there is naturally a high degree of uncertainty, looking back to the Internet revolution 30 years ago. Those companies that broke out in the early days, such as Netscape and AOL, failed to persist in the end. The unicorns that truly brought disruptive opportunities, such as MetaHub and Netflix, did not even exist at that time. On the other hand, the current AI is also like this. There are no truly certain AI investment opportunities on the market, which is determined by the stage of AI development and has nothing to do with our judgment. At this point, betting is destined to take on great risks. Then what shall I do? Is it difficult to wait until many years later when AI applications truly emerge before investing? Of course not. Although the opportunity for the AI application layer has not officially exploded yet, it is precisely because it has not exploded that it is the best time for us investors to prepare in advance. The most crucial question is, how can we seize the opportunity for AI explosion in advance? Next, Metkin will share with you my personal AI stock selection logic. I have a habit when investing, which is to start from first principles and find the most fundamental and unchanging properties when encountering particularly uncertain situations. For example, in stock investment, factors such as stock price and performance are just appearances. In reality, the most fundamental factor is often people, technological barriers, and the same applies to AI. Which fields are experiencing explosive growth and which risks are imminent? These are just appearances, so what is the most fundamental aspect to implement? I think it's the technical principles of AI big models. The reason why this round of AI can explode is essentially due to the breakthrough of AI big model technology. So let's explore the underlying technical logic of AI big models, see what insurmountable technical limitations they have, and what important development trends they have. In my opinion, these fundamental technological logics are the key to determining the future commercial applications of AI. And we can also see from them which application areas will have real opportunities. When it comes to big model technology, there are only over 20,000 people in the world who can truly understand it. Aji himself is definitely a layman. But I am fortunate to be good friends with one of these more than 20,000 people who is also a member of our MITA team. Today, I will share with you the principles of AI technology that I understand from the perspective of a financial professional. This part of the content may be obscure, but I will try my best to explain it briefly and clearly to everyone. Almost all large models on the market now, such as XBT and Jupyter, use transformer architecture. The principle of transformer model is very complex. Here we can simply divide it into four main parts. The first part is to input you, for example, a sentence you ask XBT. The second part of the adventure will break down your input into word blocks like a fun game. And these blocks will be immediately sent to an AI expert who has already read extensively. At this point, they are still strangers and do not know who they are. In this AI brain, these building blocks will begin to understand each other and engage in deep thinking, excavating their own deep meanings. You can imagine the entire process as a team of building blocks going through a brainstorming session, with the ultimate goal of having AI understand what your input is trying to convey. This whole process is the most intelligent part of the entire generative AI model. After understanding your meaning, he will start organizing the answers, but his way is a bit special. He won't come up with a whole sentence at once, but will first predict what the first word you are most likely to see is. At this point, what comes to his mind is not a definite word, but a probability table. For example, he may think that the probability of the first word being yes is 50, the probability of not being yes is 40, and so on. In the end, this part will output an answer. Faced with so many probabilities, how can AI make a choice? Here he needs to use a very simple linear rule, which has nothing to do with intelligence at all. For example, if I set a rule and always output the word with the highest probability, then his first word will output is. Next, the model will throw this word back into the previous nonlinear model, and think about it together with other words already inside to predict the second word after the second word comes out. Throw the first and second words back into the nonlinear model together and repeat the process until you receive the final answer. So that's why you see the big model jumping word by word when outputting answers to you. It's not difficult for you, that's how it works. Why do I spend so much time explaining the working principle of transformer models to everyone? In fact, it is because there are several limitations that are destined to be insurmountable. And these limitations are the key to finding business opportunities and will also become a guide for our future investment lightning protection. Therefore, it is very necessary for investors to understand them one by one. The first limitation of the transformer model is that the ability of the large model has a clear ceiling and it cannot be infinitely improved. You will find that every time it makes a prediction, it will put the predicted words together with all the previous words and calculate them again. Therefore, as the text lengthens, the computational load does not increase linearly, but increases by the square level. For example, expanding from 1,000 words to 10,000 words does not require a tenfold increase in computing power, but rather a 100-fold increase. This means that if you want the model to remember longer contexts and handle more complex tasks, the cost will sharply increase and efficiency will decrease. In addition, with the limitations of video memory and bandwidth, this will soon encounter bottlenecks. In fact, the improvement of the general performance of large models has already passed its steepest stage and entered a stage of diminishing marginal benefits. What does this mean? If companies that expand their business models continue to roll towards omnipotence, their benefits will become increasingly limited and they are easily caught up by newcomers. The only way out is to take a differentiation route. So we can see that various big models have started to have their own unique ability circles, such as Jamboard with strong multimodal capabilities, Cloud with strong coding capabilities, and CogT with strong capabilities in rigorous industries such as healthcare and law. The second inevitable limitation of the transformer model is the dilution of knowledge by large models. Although the training data for general large models is astonishing, they are extremely scattered. Its data is all over the internet. But the part really related to a certain specialty only accounts for a small proportion. It's not that a small proportion necessarily means a lack of understanding. But even if one understands deeply, they will be diluted by knowledge from other fields. For example, when answering medical questions, he is easily distracted by data from non-professional and non-medical fields. This dilution effect is destined to occur during training and cannot even be resolved during inference. This means that the general large-scale model is destined to become inadequate in solving complex problems in professional fields. It not only lacks depth, but is also easily disrupted by erroneous information from other fields. The third limitation of the transformer model is that the existence of this linear rule in the large model implies that the occurrence of AI illusions is almost impossible to completely avoid. We just gave an example that choosing the word with the highest probability is a rule. Of course, in practical situations, the rules will not be so simple and crude. You can manually adjust the rules to make the answers more imaginative or rigorous. However, no matter how reasonable the rules are, as long as they are artificially designed, there are inevitably situations that they cannot cover. Human society is already filled with various low-probability long-tail events, which is the origin of AI illusion because it can only give you high-probability results, but cannot give you results that depend on the situation. As long as this linear model still exists in the architecture of the transformer model, the model is destined to be unable to handle all problems. I know there must be some observers who are confused about these technical details when they hear this. It's okay, you just need to remember these few conclusions. Firstly, the circular model is bound to have its ability ceiling. So it is difficult for a universal model to replace all pure language domains. Secondly, the big language model cannot avoid the problem of knowledge dilution. So it is destined to be difficult to handle complex problems that require depth and focus. Thirdly, the big language model cannot do without artificially defined rules. So it is destined to have illusions. All these limitations are not solvable through technological advancements. They are inherent technical limitations of the transformer model. If you are a technical expert, then knowing about big models is enough. But fortunately, we are financial professionals and investors, so behind all these technological limitations, what I see is the business logic that is destined to happen. In fact, all the limitations of these large models point to the same conclusion, which is that as long as the transformer model remains unchanged, AI applications in vertical fields are destined to exist for a long time, be irreplaceable, and have extremely high limits. This may not be the same as many people's understanding. Let me explain more here. We say that in the model it cannot do without manually set rules, and trial rules are bound to have omissions and cannot solve all problems. So this leaves great business opportunities for vertical application fields. I can effectively avoid the illusion of AI talking to itself by precisely customizing a set of rules and processes within my own field. That is, designing a framework that is most suitable for my own industry for AI and then letting AI act according to the rules I have formulated within this framework. Those who are knowledgeable will know that this is actually a disguised prompt engineering. This approach can not only solve the problem of model illusion, but also leverage the advantages brought by AI. This is why the application of hammer language AI is destined to exist for a long time and has a very high upper limit. This is understood from the perspective of going online, and the same goes for going offline, because the knowledge of large models is destined to be diluted. It is difficult for him to solve the complex problems that require depth and focus in Hammer Jade. So as long as your Hammer Jade is complex enough, big models will be difficult to replace. Moreover, because large models are destined to have a ceiling on generality, and we have already passed the steepest growth stage, it means that the more we develop applications, the more difficult it will be to be replaced by large models. So we say that as long as the transformer model remains unchanged, AI applications in vertical fields are destined to exist for a long time, be irreplaceable, and have extremely high limits. However, it should be noted that saying the opposite is not true. as it does not mean that all hammer applications will not be overturned by big models if you were to create an AI for translation. There is a high probability that it would soon be disrupted because the application field of translation is not complex enough. And it doesn't mean that all AI vertical applications can run out. In fact, most vertical applications of AI will eventually come to an end without success, which is determined by the stage of AI development. As shown in MIT's recently released 2025 Enterprise AI Status Report. Although companies are actively trying to integrate new big models, less than 5% of projects can truly bring revenue growth. And the remaining 95% of AI projects ultimately fail to meet expectations. So for us investors, the most important question becomes what kind of vertical AI applications can truly meet the conditions and achieve long-term growth. In fact, if you understand the underlying technical principles of big models, you can also understand how to choose truly valuable AI applications. For us ordinary investors, you only need to remember 3 points. Firstly, industry experts. Secondly, data flywheel. Thirdly, scaling up. Firstly, industry experts. There are actually 2 parts here, one of which is in AI technology. You need someone to be able to turn complex tasks into AI executable processes. As I just said, there are only over 20,000 experts like this in the world now. However, this is temporary after all, and there will definitely be more and more such talents in the future. The real key here actually lies in the technological barriers of the enterprise itself. If you already have technologies that are difficult for others to replicate, then AI is also difficult to replicate. On the contrary, with the support of AI, the moat of the leader can become deeper and more difficult to cross. On the other hand, if your technology is not inherently complex, then AI can easily replicate your process, making it easy for AI to replace the hammer jade. The data flywheel also includes 3 parts. Firstly, you need to have a large amount of high-quality data to provide timely feedback to the model, so that the flywheel can rotate. The second is that you'd better have a first mover advantage because the earlier the data flywheel starts, the faster it rotates, and it's harder for others to surpass it. Thirdly, you need to have private data. If your data is available in the process, then the big model is easy to learn. If you have data that others do not have, it is easy to form your own moat to amplify the advantages of AI. Thirdly, scaling up. The application level of AI scale determines efficiency and cost. The larger the company, the easier it is to popularize and validate the model system designed by Hammer Jade, and its risk resistance will also be stronger. This can establish a natural advantage in the early stages of AI development, which are highly uncertain. Alright, this is the screening criteria for all AI vertical applications, and now we can use these criteria to preemptively seize some possible opportunities. By now, I believe that in the minds of all the viewers, there are already objects that meet their standards. Aji here shares with you a few opportunities that I personally think are good as a reference for everyone. The first one is in the field of data analysis, and the most typical company is Palantir, which basically meets all the above standards. He has the leading technological barrier in the industry and has already connected private data between various departments of the enterprise through ontology. And this data flywheel has been profitable for more than 20 years, although his client base is not large. His data analysis scenarios can be said to be the most extensive and profound in the industry, covering everything from traditional enterprises to technology companies, from governments to the military. So for such a vertical education company, AI is difficult to replace its value among customers. And AI will actually enlarge the company's barriers. Therefore, Palantir is also an AI vertical education opportunity that I personally highly value. I just analyzed this company in detail in the previous video. Interested viewers are welcome to take a look. The second is autonomous driving, represented by Tesla, which basically meets all the standards mentioned above and is also a very good vertical AI application. It has strong technical barriers, the earliest, most private data, and is unmatched in scale. However, relatively speaking, the fault tolerance rate in the field of autonomous driving is relatively low. And it is greatly influenced by regulation, so its development may not be as fast as that of the data analysis field. The remaining possibilities include advertising, biology, medicine, and education, all of which meet most of the screening criteria, but each has its own problems. For example, the barriers to entry in the advertising industry are relatively weak, while biopharmaceuticals are constrained by scale and regulation. Although education is very suitable for AI empowerment, the barriers are too low and heavily rely on data flywheels and scale. Finally, I need to apply a patch to this video. We mentioned from the beginning that in the early stages of AI development, there is naturally a high degree of uncertainty. So there may not yet be any AI application layer opportunities that have real investment value. Today, we are introducing AI application opportunities to help everyone understand and prepare in advance. When the opportunity truly arises, we can handle it with ease. Not just to let everyone bet heavily to achieve overnight wealth. Alright, that's all for the opportunities in the AI application layer. I believe some viewers may still be interested in this. We understand how to choose AI Jade. But are there any specific targets worth paying attention to under these standards? Due to time constraints, I really don't have time to introduce this part. I will put it in the next episode of AI Hammer Jade Opportunities. In the next episode, I will share with you a hammer jade that I personally think is most suitable for retail investors, and analyze in detail several investment opportunities among hammer jade. I have uploaded this part of the next episode content to Mate Pro, which is now online. You can click on the link in the top comment to view it step by step. We, the judges, don't have to be in a difficult situation. New users of Mate Pro can try it for free for the first 7 days. If you want to watch the next episode without any pressure, you are welcome to experience all the services of Mate Pro for free. I don't mind pulling a wool. Welcome everyone to come and try it out. Thank you all. If you like Aj's videos, don't forget to like, follow, and share them. Thank you everyone.